Hey guys, so there are two big IPOs happening tomorrow. One is Palantir Technologies and the other is Asana. And today we're going to be taking a look at Asana.
All right, I'm ready.
No,
Is it
dude,
rolling?
not that kind of Asana. Don't get too excited.
Oh, the company. Okay, I'm ready.
Alright.
So Asana, like Palantir Technologies, is doing a direct listing under its ticker symbol ASAN. Its share price is expected to be around 21 a share.
So going through a direct listing means that the company essentially skirts investment banking underwriters and means that companies don't raise money for themselves. And instead, employees and early investors are able to sell their shares on the first day of trading and ignore that 6-month period holding rule.
So in a direct listing, there is no matching of buyers and sellers the night before, as it happens in a traditional IPO. Instead, the company's shares simply float around in the open market, which means that finding the right price might take a long time.
So one example of a company that did a direct listing is Spotify. So Spotify in the past did a direct listing and its shares didn't actually start trading until 12:43 p.m., which is far later in the day than traditional stocks trade at.
So now let's look at the company profile. Asana has a digital platform that helps teams assign and manage tasks to keep projects organized. Team members can see what tasks should be prioritized, what they're responsible for, and when assignments are due. Teams can also build their own project timeline to plan ahead and see how projects will come in together.
The company was founded by Dustin Moskovitz, co-founder of Facebook, and Justin Rosenstein, who was an early Facebook employee who helped design the like button of Facebook.
Imagine the clout that Justin Rosenstein has. Imagine being like, yeah, I created the most used emoji in the world.
Yeah, it's crazy. So while at Facebook, they saw the coordination challenges the company faced as it scaled. And instead of spending time on work that generated results, they were spending a lot of time on status meetings and long email threads and trying to figure out who was responsible for what. They recognized the pain of work, and work was universal to teams that need to coordinate their work effectively to achieve their objectives. Yet there are no products in the market that adequately address this plan. So as a result of that frustration, they were inspired to create Asana to solve this problem for the world's teams.
So Asana uses a freemium model, just like Dropbox, Zoom, Slack, so people can use a slimmed down version of the product for free. Asana has more than 75 paying customers and 1.2 million paid users, according to its S1 filing.
So now let's take a look at this company's financials.
Their financials, like most tech growth companies, aren't great. Last year, they incurred in a total net loss of $119 million, up from last year's net loss of $51 million US. However, the revenue almost doubled. So what does this mean? Asana is focused on growth at the moment. It doesn't expect to be profitable in the near future, as it is drastically increasing expenses in their R&D department and their marketing and sales departments.
So let's look at the company's risks. So looking at risks, there's a lot of competition within the market. There's a lot of competition for organizing knowledge worker related tasks, ranging from giants such as Microsoft and Google to Slack and Smartsheet.
Another risk Asana has is that it has experienced very rapid growth. And if this growth continues, it might strain Asana's operational abilities in the future, so it might not be able to operate as a cohesive company.
So looking at key catalysts that can really drive the growth of the stock, there's 3. So looking at 1, there's a high retention rate of customers who have increased spending over time. Second is a strong presence in the market despite being an early stage growth company. And third is the huge untapped market. So looking at the first bullet point, high retention rate of customers who have increased spending over time, the company already has 1.2 million paid subscribers, and customers typically increase their use of the platform once they sign on. Asana's dollar-based net retention rate, which measures how much customers spent in a quarter versus how much the same customers spent a year earlier, is over 120%. Now moving on to bullet point 2, Asana has a strong presence in the market despite being an early stage growth company. So Asana already has contracts with Allbirds, Sephora, and Spotify, and as well as 30% of Fortune 500 companies. So now looking at the third point, the last point, is the huge untapped market. So the work management market they address is large and rapidly growing. According to reports and experts, the markets for collaborative applications and project and portfolio management in aggregate are expected to grow from $23 billion to $32 billion in 2023.
Wow.
And Asana believes that it has only tapped 3% of this market.
Taking into consideration this company's risks and catalysts, we both believe this is a buy. I think Asana's future is very bright.
Yeah, so go out there and invest right now.
Yeah, baby.